In this lecture, we are going to analyze a short trade in the euro against the British pound 1-hour timeframe using a third-degree fractal hybrid divergence as a core setup with the proper surrounding context. The deepest degree of our fractal hybrid is quite subtle in this case, so pay close attention to the small details in the chart. In number 1, we have an ignition point for buyers that brought the market up to number 1.1. Right after this point, the market starts to cascade down to meet the ignition point number 1. I want to grab your attention to how precisely the market tests the ignition point 1 by the blue arrows near number 2. This is a perfect example to show how these points of ignition in the chart serve as supply and demand areas. It has a massive volatility that cannot even begin to be compared to the surrounding candles. We must be careful with these highly volatile candles because they might be two different things. They might be just a large pack of buyers exhausting their energy, or they might be market makers doing their thing and trying to distract the rest of the market. At that point it is pretty much impossible to recognize which of these two alternatives we are talking about in this chart. From 1.1 to number 2, we have the cascading sellers attempting to break low number 1. Observe that the sellers fail to create a lower low than 1, and the buyers pick up the control of the market from number 2.1 on. Notice that those large downward tails around number 2 show the fight between buyers and sellers. Observe also how volatility increases after the market reaches the point of ignition number 1 if you compare it to the beginning of the market vector from 1.1 to number 2. 2.1 is the moment where buyers won that battle, as you can see by the marked fractal candle. In number 3 is where this market starts to show its rather interesting character because the buyers who just won the flow attempt to make a higher high than 1.1, but they end up being unsuccessful. Those apparently shy sellers from market vector 1.1 to number 2 began to show their true power in candle 3.2. This candle is easily the largest candle on this chart. Beyond that, it is probably twice as big as the second largest candle on the chart, which was candle number 1, which also happened to be the candle that gave origin to the point of ignition of the buyers who were apparently in control of this market. Candle 3.2 is a very explicit way of sellers telling buyers who is in charge of the market now. It could not be more explicit than that. Observe also that beyond the massive range of candle 3.2, it breaks the ignition point number 1 and the low number 2, turning the high number 3 into solid market structure. Sellers ended up creating a few more candles that made the market fall even more down to number 4, which is where the buyers picked up the control of the market again. In 4, the sellers were completely exhausted, so it makes sense that smaller buyers take control of the market temporarily until something new happens. We can see the buyers doing their thing by the creation of higher highs and higher lows in what appears to be the minor flow of this market. Just compare to the strength of the major flow of sellers going down from number 3. The market starts to go up and meet the green zone that was drawn based on the market vector from 3 to 4. The upper line of that green zone is in the ignition point of the candle 3.2, and the lower line of the zone is in the turning point line between 2.1 and 4. Roughly speaking, this is where those powerful sellers might show up again based on the context we have so far. Let's now move on to the momentum analysis of the market. At this point you might have been able to identify that there is a very clear hidden bearish divergence happening between high 3 and the potential high 5. A hidden bearish divergence means the market will continue to go down. We identify that by looking at the relationship between market highs and the relative strength index. The potential high number 5 is undeniably lower than high number 3, and yet the relative strength index is showing the opposite. In terms of momentum, potential high number 5 has greater upward momentum than high number 3. The simple hidden divergence is of course the gateway for us to observe the other subtler divergences happening in smaller degrees. Observe very carefully the details of the lines drawn around number 5. We have 3 gray lines. The 2 outer gray lines point to the second degree of our triple divergence. Compare the high of the candle in the left gray line with the high of the candle in the right gray line. The candle in the right gray line is like 2 ticks higher than the candle in the left gray line. If we compare these higher highs relationship to the momentum in the relative strength index, we will be able to observe a simple reversal divergence. Let's not forget that this reversal divergence is happening inside the larger hidden divergence, so this is already a second-degree fractal hybrid. However, we have a third reversal divergence happening in the outer right gray line. Notice that the candle marked by the right gray line has a higher high than its immediately previous candle, which is marked by the center gray line. If we look at the relative strength index again, we can see that the peaks are showing a lower high between the center gray line and the right gray line. This is our third divergence in this example, making this a third-degree fractal hybrid. This is as perfect as it gets in terms of fractal hybrids. Observe also that this third-degree fractal hybrid is happening inside our green rectangle that points to the area where the powerful sellers from candle 3.2 might show up again. We also have a pretty good place to put a stop loss above high number 3, but we could also place it above the upper tail of our fractal candle number 5. Our target also seems to be pretty obvious in this trade. The low number 4 represents a potential place for buyers to show up again, although that seems a little unlikely due to the overwhelming power of the sellers from number 3.2. The trade you see opened in the chart was once again triggered at the opening of the candle right after our fractal candle number 5. Remember that it's important to work only with closed candles when we deal with divergence. Let's see how this market turns out. As you can see, our trading context was correct and the third-degree fractal hybrid divergence gave a precise signal for us to enter the market. Notice how all the elements of our trading context align themselves perfectly. They almost give a sensation of certainty to enter a trade, which is good when we need to assume risk in the markets.